What's up, everybody? Crypto Noah back with another YouTube video. I hope everyone had a Merry Christmas. I'm back to work here before New Year's. So in this video, I'm going to show you a protocol that allows you to not only supply your Uniswap V3 position as collateral and borrow against it, but also be able to leverage against your Uniswap V3 positions. So before we get into it, I do have to say this video should not be taken as financial advice. Please consult your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So like I said in the beginning, I'm going to show you how you guys can leverage against your Uniswap V3 positions, as well as use it as collateral to borrow other assets. And the protocol that we're going to be reviewing is a protocol called YLDR.com. So in this video, we're going to go through the YLDR docs. We're going to go through all the platform functions. We're going to talk about the audit. I'm going to cover everything you guys need to know in terms of strategies and all that stuff. And then at the end, as always, we're going to do a platform walkthrough, and then I'm going to tell you guys if I would use this protocol or not and why. So without further ado, let's get into the content. All right, so here we are on DeFi Llama. And, I always like to check the total value locked, and, DeFi Llama offers some good metrics here. So you can see that the TVL is only 247,000. This protocol is fairly new. Looks like they just launched on December 20th. So, we'll see how this grows as time goes along. Another thing that's important to remember is that they are an Aave V3 fork. So the reason why I say that's important is because I've heard that they're going through an audit right now, but the audit isn't back yet. But the code that they forked is from Aave. However, the most important thing in the protocol that involves the V3 positions and stuff like that, collateralizing and leveraging, they don't have an audit for that yet, or at least back. So that is something to keep in mind. So here we are on the docs. What is YLDR.com? It's the first lending protocol built specifically for liquidity providers and allows LPs to create leveraged UniV3 positions, as well as use the Uniswap position as collateral to borrow more liquidity. So they go on to talk about how to leverage. So it gives you all the directions. So in order to leverage, you first have to have a UniV3 position, and you can either do that on Uniswap, or you can use the button on their website, YLDR.com, and it goes through all the steps on how you can leverage. They offer up to 5x leverage. They allow you to pick your loan to value ratio, all that stuff. Then they go to talk about how to choose an asset for leverage. So it goes on to say that the leverage position is created by using borrowed assets or borrowing assets. So in order to take out leverage, people have to first supply assets first. So it's like that whole chicken and egg problem. You can't borrow anything without there being supply, and people don't think people are going to borrow while they supply because there would be no yield. But like I said, they have over 200K in TVL, so it looks like they're rolling here. So it goes on to tell you, like, with an ETH USDC pool, which you should borrow if you're bullish on ETH, or which you should borrow if you're bullish on USDC. So I can tell you right now, if you're bullish on ETH and you think ETH is going to go up, it's best to use Ethereum as your collateral, because you can collateralize your ETH, you can borrow more ETH, you can loop that a few times, and as the value of your collateral is going up, and the value of what you're buying, which is ETH, is going up, you'll be able to take those profits, pay off the loan, and keep the difference. However, if you're bearish on ETH and you think it's going to go down, you don't want to use Ethereum as your collateral, because if the value of your collateral drops to a certain point, that's how you get liquidated, and you have to pay liquidation fees, and you want to avoid that the best way you can. So it might be a better idea to use a stable coin as your collateral, because the value of USDC is most likely going to be at around $1, maybe a little over, maybe a little under. So we use all these price graphs to show you all this stuff. It talks about the P&L and how it'll change if you use leverage. So now let's go on and talk about how to borrow. So they give you all the options. So first you have to supply a Uniswap V3 position as collateral, and you are giving up custody over your assets, because when you create a Uniswap V3 position, that position is technically an NFT. So you're giving them your NFT, and if you lose your NFT, you can't get your liquidity back. So that's an important thing to keep in mind. But you supply your position as collateral, and then after you supply it as collateral, then you're able to borrow other assets. So unlike Aave, where you're able to just deposit assets and then borrow assets, on here you can deposit your Uniswap V3 NFT and use that to borrow assets as well. And it gives you all the steps, and we're going to do a platform walkthrough and go through this. And it talks about how you borrow against digital assets. And this is pretty much just like Aave. You supply the digital assets, and then you can borrow them. So you can supply ETH, borrow USDC. You can supply USDT and borrow wrapped ETH. nothing really new there. And I've talked about that on my Radiant Capital videos. All right, so now we went through the docs. Let's check out some of their socials. You can see that they just started posting. They only have 9 posts, 113 followers, and they're following 4 people. This is the founder right here, it looks like. Product owner, I'm guessing. Not a big following on his page as well. So that's another thing to keep in mind. The founders are not docs. You don't know who they are. So, you always want to proceed with caution when you don't know who it is behind it, because that takes the liability off of them. So Twitter isn't too crazy, but we'll see how that progresses as time goes along. If you look at their Discord, not too many channels here, but people are talking. So, it's not just a complete ghost town. Looks like people have been talking in here for a while, ever since December 20th. So all this is from December 20th. So that's a good conversation for December 20th. The Telegram is somewhat active. It's about as active as the Discord. I haven't scrolled all the way up, and I don't have it on my Mac, so I went through it on my phone. And you can just go to their website and click Telegram at the bottom if you want to go through it as well. All right, so now that we went through all the docs, all of their socials, let's go through the actual platform. And at the end, I'm going to tell you if I would use the platform or not and why. All right, so here we are on their website. They talk about pretty much what we went over in the docs: leverage, borrow, supply, 5x leverage. They tell you how it works. They give a nice little spreadsheet for the borrow and everything like that. Like I said, it doesn't have any mention of an audit here yet, but I've heard through the old grapevine that they are going through one right now. Let's launch app. And they give you the option to track your wallet without actually connecting. I haven't connected to this platform yet because, like I said, they don't have an audit. So, if you are going to connect to a protocol without an audit, or a protocol that you're not 100% sure on, do it on a wallet that's separated where most of your bags are. Or if you can just do a read only like I'm doing here, do that as well. So let's go through this here. So this is the leverage tab, right? So these are the current positions that they allow you to leverage on, and we're on the arbitrum. So if you had ETHUSDC, ETHUSDC.E, they offer up to 5x leverage, and like I said, you can create the position on Uniswap and then leverage. Same thing on Ethereum. They have around $100,000 in TVL on both networks. So they offer even less on Ethereum as they do on Arbitrum. So if we go to lending, it'll tell you what you have in your wallet that you can use to supply. And then this is what you can borrow. You see the rates here. So when you supply ETH, you get paid at 20% APY. That's not bad. It's not bad at all. That's actually really good for single-side staking. You don't have to worry about impermanent loss. And then if you want to borrow, these are the yields. Now, it makes sense that these yields are really high because there isn't a high TVL yet. So it's all supply and demand. An important thing to know, which I like, they don't charge any fees to do anything with your Uniswap V3 positions. They make money from the spread from borrowers and lenders. So let's say I supply ETH and I'm getting 20.62% APY. People who borrow, they're paying 29%. So they get the 9% and they take a portion for themselves, and then they give another portion to the suppliers because, that's how they make the yield. And then they have a transaction history tab where you can check all the transactions. Obviously, I don't have any to track. Now, guys, I want to dive into a little bit of strategies here because, you want to make sure you know what you're doing, because when leverage comes into play, yeah, you can make more, but you can also lose more as well. So you have what's called a loan to value ratio, and you have a liquidation ratio. Like, let's say your loan to value ratio is 50%, your liquidation ratio is 80%. That means you have 30% for the price to move before you get liquidated, okay? Now, anything can happen within crypto, so I wouldn't let the spread be any under 35, 40%. Crypto doesn't usually move that much down in a day, but it has happened. So when you're doing these kind of positions, you want to use proper risk management and make sure that you have a strong thesis as to why you think the market's going to do what it's going to do. If you think the market's consolidating, why do you think that? A good reason why I would think it is because it's been consolidating for a while and hasn't broke out of a zone. Like, it was consolidating here, but it broke out of the $2,000 level, and it looks like it's testing it as support. So without factoring in like fundamental analysis, market sentiment, just looking at this chart, this looks bullish. It's on top of our 200-day, our 62. So this might be one where you have profits to the upside, and as it goes up, you can almost use it as a stop loss, but you can drag like the bottom of your range up higher and higher. And in case no one here, in case the new people watching this channel doesn't know what concentrated liquidity is, it allows you to provide liquidity within a certain price range instead of whatever the price of ETH USDC is. So you can say if the price of ETH is between 1,500 and 2,000, only use my liquidity there inside of this red box, or you can go from 900 to 1,000. All right. So another thing on the downside, if you got a retest to the downside and it's retesting previous support as resistance, that may be a good one to, like I said, you coming in higher on USDC, like most USDC, and then you're getting paid to buy the dip with leverage. Okay. So super, super important to keep that in mind. Risk management is the most important thing. And if you want to learn how to employ leverage strategies, employ yield farming strategies, generate passive income on your idle crypto assets ahead of the bull market whenever it comes so you can have more profits to sell, and you want to do it with a strong community that is always trying to make each other better, click the link in the description. Book a free strategy session with one of our team members. We're going to ask you a few questions, kind of see where you are in your investing journey, your DeFi journey, and just see if we can help you answer any questions you may have and ultimately determine if our program is a good fit for you. I do feel like we have one of the best yield farming courses on the market. You also get our buy and sell calls. You get access to coaching. And I really feel like it's one of the best, if not the best, DeFi groups in all of crypto. I've been in crypto since 2017. I'm really passionate about the technology. So to interest you, like I said, book a free strategy session. We'll see if it's a good fit. If not, I'm sure we can point you in the right direction. Now, having that said, would I use this platform or not, and why? Like I always say, it depends. So let's talk about why I wouldn't use it right now. The reason why I wouldn't use it right now is because there aren't any audits done. And when I say audits, I don't just mean one, because 9 times out of 10, when you get an audit, it normally comes back with things that need to be fixed. A lot of projects will just leave it there, be like, oh, I got an audit. A lot of people don't go through it. What you want to see is they got an audit that came back, had things that they need to fix on there. If they don't have anything that needs to be fixed and it's a reputable auditing firm, hey, great, good on you. But most of the time, something needs to be fixed. And what you want to see is another audit after those things have been addressed, saying that they are not a vulnerability anymore, because it gives you more assurance that your funds are safe. Another reason why I wouldn't use it right now is just because the TVL is really, really low. I'm not going to say I wouldn't use it because of that, but I wouldn't use as much as I would want to, because what can end up happening is if the supply and demand dynamics are not favorable, you can end up supplying something and it can be locked until a borrower repays it. So you won't be able to get your money off. And that happened to me on another compound fork that I'm not going to mention. And my funds were locked for like 2 weeks. So I don't want that to happen again. So I like to have, at least a couple $1 million in TVL, and I like to monitor it so I can make sure that my funds are not locked, because we're heating up in this bull market. I might want to use that cash to buy something I'm bullish on so I can make some money. So that's something to keep in mind. Another reason, I wouldn't say this is a yes or no. This would make me use it more. Like as you saw on the platform, there are only certain pairs that you can leverage against. And it's a lot of Uniswap V3 pools that I'm in that they don't allow you to leverage on their platform. It's mostly ETH, USDC, Wrap Bitcoin, like, the simple blue chip pairs. But a lot of times those blue chip pairs aren't the pairs that make you a lot of money. Well, it depends on your range, but you just got to know what you're doing. But other than that, I love the project. I feel like it has a great use case. It's really good to be able to leverage against your Uni V3 positions instead of just having them there. And if you're confident in your Uniswap V3 strategy and it being a good long-term strategy or pool for you to be in, it wouldn't be a bad idea to leverage against it. Like I said, if you know what you're doing and if you're convicted as to where you think the market's going, and then most importantly, or as equally as important, you have something that will happen that will invalidate your thesis, and then you have an action you'll take on if your thesis is invalidated. Because more times than not, or very often, you're going to be wrong when it comes to investing. So you want to have a plan on what to do so you don't have to think about it and act irrationally if the market goes the other way. So with that, I like to conclude this video. If you got value, consider subscribing, comment, like, let me know if I missed something. Let me know what product protocol you want me to cover next. And with that, I love every single one of you watching. I appreciate you tuning in, and I'll see you in the next video. Take care and happy holidays.